Welcome to Module 3 of your training videos. In this video I want to talk about short trades or sell trades and give you some examples of short trades so that you have the knowledge you need to trade the system well. To begin with, let's just talk about what we're doing here. When we make a short trade, we need to take a few steps. We first determine that the trend is in fact down. At that point we look for a sell indicator, and assuming we get one, we enter the trade as per the rules that we've set up, and then we use our exit strategies to exit the trade at the right time. When we're entering the trade, there's actually three steps that we'll be taking. First, we determine that the trend is in fact down. And if you remember from the last video, our criteria to establish that is that the price is below the EMA 50 and the EMA 200. The EMA 50 has just crossed the EMA 200 and is currently below it. And the MACD value is negative. At that point, we have our trend. We look for our entry signal. The entry signal is our retracement. When the price rises, it makes the MACD value increase, and the MACD eventually turns from negative to positive. And our trigger to enter the order is when the MACD value turns from that positive number back to negative, and when that happens, we place our order. When we're entering a trade, we place an order at market price with two lots or multiples of two, and I'll talk about multiples of two when we calculate the correct trade size in the money management portion of these training videos, video 5. We then place a protective stop loss 1 pip above the highest price of the pullback or retracement, and then we follow our two exit strategies to exit the trade profitably and at the right points. So let's look at this on some charts. First of all, we determine we are in a downtrend. So using our criteria, the price is below the EMA 50 and the EMA 200, and in this case it is. Here's our EMA 50, our EMA 200, and the price is currently trading below that. The EMA 50, the green line, has just crossed over the EMA 200, the orange line, and is currently below it, so that is true. And the MACD value is currently trading negative, so on the downside here. So we have established on this chart that we are in a downtrend. It's time to look for our entry signal. So our entry signal, again, when the price rises, it makes the MACD value increase, and the MACD becomes positive. And our trigger to enter a trade is when the MACD value turns from positive back to negative again. So here we go. We've got our downward trend. The price retraces, and as it does, it brings the MACD value into the positive side. And then our trigger to enter is when it turns from positive back to negative, which it does at about the middle of this bar here. And at that point, we enter the trade. We place an order for two lots. You would actually place two separate orders for one lot each. Enter at market price with two lots or multiples of two. We place a protective stop loss 1 pip above the high point of the retracement. So that would be 1 pip above the highest point that it made when it was retracing. And then we follow our two exit strategies. So just looking at that chart here again, the price has retraced. It's brought the MACD into the positive side of things, and then it continued on its downward trend and pushed it back into the negative side. At that point, about the middle of this bar, we enter the trade with two lots, and we set our stop loss to 1 pip above the high point of the retracement. We then have two separate exit strategies, one for each of the lots that we have in the trade. We exit the first lot when the MACD turns from negative to positive. At this time, we might also move the stop loss for the second lot to the break-even point. So we're in the trade. We entered the trade here. It continues on in its downward trend, and down here looking at the MACD, when the MACD turns from negative to positive again, which happened about here, we exit the first lot. So at this point we exit the first lot profitably, and we take our stop loss and move it from above the high of the retracement to the same price that we entered at. And now we still have the second lot in the trade. We exit the second lot when the EMA 9 crosses to the upside of the EMA 20. So looking on the chart here, the EMA 9 is the purple line, EMA 20 is the blue, and it's trading underneath it down to here, and then it turns up. At this point, we would exit our second lot with a small profit. With this particular trade, the price turned around shortly after we exit our first lot, so we take a small profit on our second lot and exit the trade with both lots profitable. So now just watch the trade examples. I'm going to go through this in MetaTrader with you. I'm going to do it a couple of times. And then once you've done that, move on to video 4, and we'll cover the same ideas for long trades. For our first trade example here, we're looking at the Euro-Japanese Yen on a 4-hour chart. And just taking a look here, we need to first establish the trend. We need to make sure that we are in a downtrend before we make a short trade. So looking at our chart here, we've got the EMA 50 crossing over the EMA 200 at this point, and the EMA 50 is now below it. We've got the price trading below both the EMA 50 and the EMA 200. And we've got the MACD on the negative side of things, and actually quite a bit in the negative side of things in this area. So now all we need to do is wait for our entry signal. The entry signal came at this point here. We've got the MACD here turning from negative to positive, and then back to negative again. So looking at it on the chart, the price has rallied. It's brought the MACD into the positive, and then just a few bars later, it's dropped again, and it's gone into the negative. So that's our trigger to enter our trade. We entered this trade at 162.75. We enter with two lots, or two separate orders actually. So the first order we ordered one lot, and then we ordered another lot with the second order, and we set our stop just above the high point of the retracement. In this case, our stop was set to 163.72. So we entered the order here, our stop is set here, and then once we're in the order, we wait for the results. We exit our first lot when the MACD turns from negative to positive again, which happened over here. It actually happened right here. At that point, we took our first lot out of the trade, and we made 134 pips on the first lot. We leave our second lot in the trade, and we set our stop loss to the break-even point. So we move our stop loss on the second lot to the break-even point, or the point where we entered the trade. We leave it in the trade, and now we wait for the EMA 9 to cross over the EMA 20, and in this case it actually happened just a little while later. The price reversed, and it happened. We ended up exiting the second lot with 10 pips profit, so 144 pips profit total on this trade. And that's our first example. Let's take another look at another one here. Okay, looking at another trade example here, I'm looking at the US dollar Swiss franc on a 4-hour chart. And again, we have a nice long-term downtrend established here, and we made a trade with this one. Just to establish our trend criteria first, the EMA 50 has crossed over the EMA 200 and is now on the downside of it. The price is trading below both the EMA 50 and the EMA 200, and at the point when we were establishing that criteria, the MACD is in the negative. At this point here, we have a price rally, and the MACD turns from negative to positive, and then our entry point is over here when it turns back to negative again. We entered this order at 1.1139. Our initial stop loss was set to 1.1191, and we entered with two lots, and we entered two separate orders. The first lot we exited when the MACD turned from negative to positive again, so it was actually just a little while later. That one was exited at 1.1136, so it was only 3 pips profit on the first lot, but because the EMAs haven't crossed over yet, we kept the second lot in the trade. The second lot we kept in the trade, and it continued nicely on its downward trend. We closed out the second lot a couple of days later on the 4-hour charts at 1.0980, so we had 159 pips profit on the second lot. Total profit on this order was 162 pips, so a nice profit on an order with the US dollar Swiss franc. Now move on to the next video, and we will cover some examples doing long trades or buy trades. And then in the last video, we're going to talk about money management and give you some tips to help you stay profitable.